Could Bitcoin skyrocket to an eye-watering $144,000? The world's most popular cryptocurrency is currently navigating a pivotal moment as it approaches a critical resistance level that could determine its next major move. But here's where it gets controversial. While some analysts are optimistic about the potential for new highs, others warn that recent market turbulence could throw a wrench in the works. What lies ahead for Bitcoin, and how should investors interpret these signals? Bitcoin hit an impressive high of $124,533 on August 14th, before experiencing a pullback. This decline came after July's inflation data for wholesale prices turned out to be hotter than anticipated, shaking investor confidence. While the Consumer Price Index CPI broadly matched market forecasts, the core CPI, which excludes food and energy, rose slightly to 3.1%, just above Wall Street's predictions. However, the real surprise came from the Producer Price Index, PPI, which measures inflation at the wholesale level. It surged by 0.9% month over month, marking its largest increase in nearly 3 years. This unexpected spike reignited concerns about inflationary pressures. As of the time of writing, Bitcoin was trading at $117,741, reflecting a modest 0.77% decline over the past 24 hours. On Friday, BTC briefly dipped to a low of $116,859, signaling a period of volatility. So, what does this mean for the road ahead? To answer that, we need to look at key metrics like Bitcoin's average entry price for newer investors and its standard deviation bands, which can help identify when the market might be overheating. According to data from Glassnode, the short-term holder realized price, STHRP, for Bitcoin currently stands at $107,000. This figure represents the average acquisition cost of Bitcoin for newer investors based on on-chain activity. A crucial resistance level lies at the STHRP plus 1 sigma mark, which is approximately $127,000. Breaking through this barrier could pave the way for Bitcoin to reach the $144,000 level, corresponding to the STHRP plus 2 sigma threshold. Historically, such levels have coincided with heightened selling pressure during previous market peaks. It's important to note that Bitcoin hasn't yet reached these thresholds, suggesting that the current rally may still have room to grow. Nevertheless, this is the part most people miss. Even if Bitcoin surpasses these levels, sustaining momentum will require overcoming significant psychological barriers and external economic factors. Meanwhile, all eyes remain fixed on the Federal Reserve. Last Friday, Fed President Austin Goolsbee addressed the mixed inflation figures, highlighting ongoing uncertainties surrounding rate cuts. Investors are now eagerly anticipating the Fed's annual symposium in Jackson Hole, Wyoming, scheduled for August 21-23. Historically, this event has served as a platform for signaling shifts in monetary policy, making it a must-watch for anyone with a stake in financial markets. Market expectations suggest that the Federal Open Market Committee, FOMC, will likely vote to reduce the benchmark federal funds rate by a 0.25 percentage point in September, bringing it down from its current range of 4.25% to 4.50%. Yet uncertainty looms large regarding future moves. There's a 55% probability of another rate cut in October, but the likelihood of a third reduction in December drops to just 43%. These shifting probabilities underscore the fragile nature of investor sentiment. So, where does this leave Bitcoin? With inflation data sending mixed signals and the Fed walking a tightrope between supporting growth and controlling inflation, the path forward remains uncertain. Could Bitcoin defy the odds and surge to $144,000? Or will it succumb to macroeconomic headwinds? And this is the part that sparks debate. Do you believe Bitcoin's resilience will outweigh broader economic challenges? Or are we heading for a correction? Share your thoughts in the comments below. Let's dive into this fascinating discussion together.